Question 1. Which of the following is a key difference between own occupation and any occupation disability insurance policies? A. Own occupation policies provide benefits only if the insured is unable to perform the duties of their specific occupation, while any occupation policies provide benefits only if the insured is unable to perform any work at all. B. Own occupation policies provide benefits if the insured is unable to perform any work, while any occupation policies provide benefits if the insured is unable to perform the duties of their specific occupation. C. Own occupation policies offer a higher percentage of income replacement compared to any occupation policies. D. Any occupation policies have shorter elimination periods than own occupation policies. Answer A. Explanation. Own occupation policies are designed to provide benefits if the insured is unable to perform the duties of their specific occupation, even if they are capable of working in another role. This contrasts with any occupation policies, which require the insured to be unable to perform any occupation for which they are reasonably suited by education, experience, or training. Therefore, the correct distinction is that own occupation focuses on the specific job role, while any occupation is broader and includes the inability to work in any capacity. Question 2. Which of the following factors would most likely impact the underwriting process for a disability insurance policy? A. The policyholder's job duties and occupation-related risks. B. The policyholder's age at the time of the claim. C. The policyholder's current income level. D. The policyholder's level of physical activity during the claim period. Answer A. Explanation. Underwriting for disability insurance heavily focuses on the risks associated with the insured's occupation, as certain jobs carry higher risks for disability than others. Job duties and the physical or mental demands of the occupation will be assessed to determine the likelihood of disability occurring. While income, age, and physical activity can also be relevant, occupation-related risks are among the most significant factors in underwriting. Question 3. Mr. Thompson, a software engineer, is applying for disability insurance. He is concerned about the impact of his occupation on his policy. Which of the following policy types would provide the broadest coverage for his job? A. A non-cancelable policy. B. An own occupation policy. C. An in-occupation policy. D. A guaranteed renewable policy. Answer B. Explanation. The own occupation policy would provide the broadest coverage for Mr. Thompson, as it ensures that he will receive benefits if he is unable to perform the specific duties of his occupation as a software engineer, even if he could still work in another role. This is ideal for someone in a specialized field such as software engineering, where losing the ability to work in the specific occupation would be a serious financial burden. Other policies like any occupation are more restrictive and require the insured to be unable to perform any work. Question 4. Which of the following is a typical exclusion in disability insurance policies? A. Disability resulting from pre-existing medical conditions. B. Disability resulting from injuries sustained at work. C. Disability resulting from pregnancy complications. D. Disability resulting from accidental injuries. Answer A. Explanation. Most disability insurance policies exclude coverage for disabilities arising from pre-existing conditions. This is a standard clause in disability policies designed to limit the insurer's exposure to high-risk individuals. Pre-existing conditions are typically defined as medical issues that existed prior to the policy's inception, and insurers often impose a waiting period before covering these conditions. Question 5. Which of the following statements best describes the integration of Social Security Disability Insurance (SSDI) with private disability insurance? A. SDI benefits are always coordinated with private disability insurance to reduce the total benefit amount. B. Private disability insurance pays full benefits regardless of whether SSDI benefits are received. C. SCI benefits are not taken into account when calculating private disability benefits. D. Private disability insurance benefits may be reduced based on the amount of SSEI benefits received. Answer D. Explanation. Private disability insurance typically integrates with SCI benefits to ensure that the total amount of disability income does not exceed a certain percentage of the insured's pre-disability income. As a result, the private insurer may reduce its benefits to account for the SCI benefits received, ensuring that the combined total benefits do not exceed a certain cap. This is a common clause in disability policies to avoid overinsurance. Question 6. A disability insurance policy includes a 90-day elimination period before benefits are paid. Which of the following best describes the purpose of the elimination period? A. It defines the length of time benefits are paid to the policyholder. B. It determines how long the policyholder must wait before becoming eligible for benefits. C. It represents the period during which the policyholder must receive treatment. D. It indicates the maximum time the insured can be on disability before benefits cease. Answer: B. Explanation. The elimination period is the time frame that must elapse after the onset of disability before benefits begin to be paid. It is essentially a waiting period that helps reduce the insurer's risk and discourage frivolous claims. The longer the elimination period, the lower the premiums are likely to be, as the insured is responsible for covering a portion of the disability period before benefits kick in. Question 7. Which of the following disability insurance policy riders is designed to increase coverage as the insured's income grows? A. Future increase option rider. B. Cost of living adjustment COLA rider. C. Disability income rider. D. Waiver of premium rider. Answer: A. Explanation. The future increase option rider allows the insured to increase their disability coverage in the future without having to undergo additional medical underwriting. This is typically tied to increases in the insured's income or a predetermined schedule. The other riders, like COLA, adjust for inflation, while the disability income rider adds additional coverage specifically for income replacement in case of disability. Question 8. Which of the following is true regarding the taxation of disability insurance benefits in Ohio? A. Disability insurance benefits are always taxable, regardless of the source. B. Disability benefits from employer-sponsored policies are taxable if the employer paid the premiums. C. Disability benefits from private policies purchased individually are always taxable. D. Disability insurance benefits are not subject to taxation if the policyholder has a pre-existing condition. Answer: B. Explanation. Disability benefits from employer-sponsored policies are taxable if the employer paid the premiums. If the premiums were paid by the employee using after-tax dollars, the benefits are typically not taxable. However, if the employer paid the premiums, the benefits are subject to income tax as they are considered a fringe benefit. Private policies, especially those purchased individually with after-tax dollars, generally provide tax-free benefits. Question 9. Which of the following would be considered a partial disability under most disability insurance policies? A. The insured is unable to work in their usual occupation but can perform lighter duties. B. The insured is unable to perform any work but is still able to engage in recreational activities. C. The insured is unable to perform any work including their usual occupation. D. The insured can work full-time in their occupation without any restrictions. Answer: A. Explanation. Partial disability refers to a situation where the insured cannot perform all of the duties of their regular occupation but is still able to engage in some work, typically in a limited capacity. This often results in a reduced benefit amount, as the individual may still be able to earn income, though not at their full potential. The other options describe either total disability or full recovery. Question 10. Which of the following best describes the role of a claims adjuster in the disability insurance process? A. The claims adjuster assesses the severity of disability and determines eligibility for benefits. B. The claims adjuster is responsible for determining the premiums for new policies. C. The claims adjuster provides legal counsel to the policyholder during a claim dispute. D. The claims adjuster approves policy renewals based on the policyholder's current health condition. Answer: A. Explanation. The claims adjuster plays a critical role in evaluating the severity of the disability, verifying that the condition meets the terms of the policy, and determining eligibility for benefits. They are involved in reviewing medical records, coordinating with healthcare providers, and ensuring that the claims process is followed correctly. They do not typically handle policy renewals or legal disputes directly, although they may collaborate with legal teams in cases of disputed claims. Question 11. Which of the following best describes an non-occupation disability insurance policy? A. It provides benefits only if the insured is unable to perform any occupation. B. It provides benefits if the insured cannot perform their specific occupation, even if they can work in another occupation. C. It limits benefits to the first 12 months of disability. D. It provides benefits only for disabilities caused by accidents. Answer: B. Explanation. A known occupation policy provides benefits if the insured is unable to perform the specific duties of their own occupation, even if they can still work in another type of job. This policy is especially beneficial for professionals in specialized fields as it provides income replacement if they are unable to continue in their particular occupation, even if they are capable of other work. Question 12. A disability insurance policy includes a waiver of premium rider. What does this rider provide? A. It allows the insured to cancel their policy without penalties during disability. B. It waives the policy premiums while the insured is disabled. C. It increases the benefit amount once the insured is disabled. D. It extends the elimination period by an additional 30 days. Answer. B. Explanation. A waiver of premium rider ensures that the insured does not have to pay premiums during a period of disability, typically after a certain waiting period, elimination period. This rider helps maintain the policy in force without additional financial burden on the insured during a time when they may be unable to work and earn income. Question 13. Which of the following is true about group disability insurance compared to individual disability insurance? A. Group disability insurance typically offers broader coverage and fewer exclusions. B. Group disability insurance is typically less expensive than individual disability insurance. C. Group disability insurance offers more flexible policy terms, such as changing coverage amounts. D. Group disability insurance requires medical underwriting for all participants. Answer. B. Explanation. Group disability insurance is typically less expensive than individual policies because it is offered through an employer or other organization, which spreads the risk across many participants. It is generally less customizable with more standardized coverage and may have more exclusions than individual policies. Individual disability insurance, on the other hand, allows for more tailored coverage but comes at a higher cost. Question 14. Which of the following best describes the residual disability benefit in a disability insurance policy? A. It provides a lump sum payment to the insured regardless of the severity of the disability. B. It provides benefits to the insured if they are partially disabled and cannot perform some but not all of their job duties. C. It pays a reduced benefit to the insured if they are unable to work at all. D. It covers the cost of medical treatment for a disability but not lost income. Answer. B. Explanation. The residual disability benefit pays partial benefits to the insured if they are unable to perform some but not all of the duties of their occupation. It is designed to compensate for the lost income due to partial disability. This benefit is common in policies that offer non-occupation or partial disability coverage. Question 15. What does a disability insurance policy's elimination period refer to? A. The period during which the insured must be hospitalized before receiving benefits. B. The period after disability begins during which no benefits are paid. C. The time during which the insured must receive ongoing medical care. D. The maximum period of time benefits are paid after the disability occurs. Answer. B. Explanation. The elimination period is the waiting period after disability begins during which no benefits are paid. It is similar to a deductible in other types of insurance, and it typically ranges from 30 to 180 days depending on the policy. Once the elimination period is over, the insured starts receiving disability benefits. Question 16. Which of the following disability insurance policy options typically allows the policyholder to increase coverage without further medical underwriting? A. Future increase option rider. B. Waiver of premium rider. C. Cost of living adjustment COLA rider. D. An occupation rider. Answer A. Explanation. The future increase option rider allows the policyholder to increase their coverage in the future, typically in line with increases in income, without undergoing further medical underwriting. This is especially useful as the insured's earning potential grows as they can increase their coverage to match their income. Question 17. Which of the following is true regarding the tax treatment of disability insurance benefits for policies purchased individually by an employee using after-tax dollars? A. Disability benefits are taxable as ordinary income. B. Disability benefits are not taxable and are received tax-free. C. Disability benefits are tax-deferred until the insured reaches age 65. D. Disability benefits are taxable only if the insured's disability lasts for more than 12 months. Answer. B. Explanation. If the insured pays the premiums for the disability insurance policy with after-tax dollars, the benefits received from the policy are not taxable. This means the insured receives the full benefit amount without having to pay taxes on it. If premiums are paid by an employer using pre-tax dollars, the benefits may be taxable. Question 18. Which of the following best describes a waiting period in disability insurance policy? A. The time period during which the insured cannot file claim for benefits. B. The amount of time the insured must wait before receiving benefits after becoming disabled. C. The time after the policy is issued before it becomes effective. D. The time the policyholder has to submit claim after disability occurs. Answer. B. Explanation. The waiting period, also known as the elimination period, is the period of time that must pass after the insured becomes disabled before benefits will begin to be paid. The waiting period can range from a few days to several months and is set to reduce the insurer's risk and the likelihood of covering short-term disabilities. Question 19. Which of the following would be most likely to be considered? A total disability under most disability insurance policies. A. An insured is unable to perform their specific occupation but can work in another role. B. An insured is unable to work at all either in their usual occupation or any other occupation. C. An insured is able to work part-time but cannot perform all job duties. D. An insured is unable to work full-time in their usual occupation but can still work full-time in a different role. Answer. B. Explanation. Total disability under most disability insurance policies typically refers to the inability to perform any work at all, whether in the insured's usual occupation or any other occupation. This is often called any occupation disability coverage, which provides a higher level of benefits than policies that only cover lone occupation disability. Question 20. Which of the following is a common feature of disability insurance policies for high-risk occupations? A. Coverage that increases automatically based on inflation. B. Higher premiums due to increased risk of disability. C. Benefits are paid regardless of the severity of the disability. D. Waiver of premiums if the insured can return to work in a different role. Answer. B. Explanation. High-risk occupations, such as those in construction or heavy machinery, are associated with a greater likelihood of disability. Therefore, disability insurance policies for individuals in these occupations generally come with higher premiums to reflect the increased risk. The coverage may also have specific exclusions or modifications to account for these higher risks. Question 21. Which of the following is typically excluded from coverage in most disability insurance policies? A. Disability due to an accident. B. Disability resulting from a pre-existing condition. C. Disability due to mental health disorders. D. Disability caused by a stroke. Answer. B. Explanation. Most disability insurance policies include an exclusion for pre-existing conditions. This means if the insured has a condition that existed before purchasing the policy, it may not be covered. Some policies may have a waiting period before pre-existing conditions are covered or may offer limited coverage for such conditions. Question 22. What is the purpose of a cost of living adjustment (COLA) rider in disability insurance policy? A. To increase the benefit amount to account for inflation over time. B. To reduce premiums after a certain number of years. C. To waive premiums if the policyholder is disabled. D. To adjust the elimination period based on the insured's age. Answer. A. Explanation. A cost of living adjustment COLA rider ensures that disability benefits increase over time to keep up with inflation. This helps maintain the purchasing power of the benefits and ensures that the insured's income replacement remains adequate even as the cost of living rises. Question 23. Which of the following is a feature of an individual disability insurance policy that is not typically found in group disability insurance? A. Coverage that is portable, meaning it can continue even if the insured changes jobs. B. A higher premium due to individual underwriting. C. A lower benefit amount compared to group coverage. D. A shorter waiting period for benefits to begin. Answer. A. Explanation. An individual disability insurance policy is typically portable, meaning the insured can keep the policy even if they change jobs. In contrast, group disability insurance is usually tied to the employer and is not portable unless the insured converts it to an individual policy. Question 24. Which of the following is the main purpose of a residual disability rider in a disability insurance policy? A. To provide benefits if the insured can only work part-time due to a disability. B. To provide benefits for the first 12 months of disability. C. To waive premiums during periods of disability. D. To cover medical expenses related to the disability. Answer A. Explanation. Of residual disability, rider provides partial benefits to an insured who is not totally disabled but is unable to perform some of the duties of their occupation. This rider helps to compensate for a loss of income if the insured can only work part-time or at a reduced capacity. Question 25. Which of the following is an example of own occupation disability insurance coverage? A. Coverage that pays benefits if the insured cannot perform any job. B. Coverage that pays benefits if the insured cannot perform the job they were trained for. C. Coverage that pays benefits if the insured cannot perform specific tasks in their current job. D. Coverage that only provides benefits for job-related accidents. Answer B. Explanation. Own occupation disability insurance provides benefits if the insured is unable to perform the specific duties of their own occupation, regardless of whether they are able to work in another field. This is ideal for professionals with specialized skills or training, such as doctors, lawyers, or pilots. Question 26. What is the typical effect of a non-cancelable clause in disability insurance policy? A. The insurer can cancel the policy at any time. B. The premiums may increase over time. C. The insurer cannot cancel the policy or change the premiums while the insured is alive. D. The policy automatically renews each year without any premiums. Answer C. Explanation. A non-cancelable clause ensures that the insurer cannot cancel the policy or increase the premiums as long as the insured continues to pay the premiums. This provides the insured with a guarantee of coverage throughout the life of the policy, regardless of changes in health or risk factors. Question 27. Which of the following would be covered under a disability insurance policy's accident rider? A. Disability resulting from motor vehicle accident. B. Disability caused by an illness or disease. C. Disability resulting from pre-existing condition. D. Disability caused by normal aging. Answer A. Explanation. An accident rider typically covers disabilities that result from an unforeseen accident, such as motor vehicle accident, fall, or other traumatic incidents. This rider may provide additional coverage for accidents that lead to injury or disability, usually with more favorable terms compared to disabilities caused by illness. Question 20. How does a future increase option rider benefit the policyholder? A. It allows the policyholder to increase their disability benefit without providing proof of medical insurability. B. It allows the policyholder to reduce their premiums after 5 years. C. It provides additional coverage for medical expenses related to disability. D. It increases the benefit amount automatically based on inflation. Answer A. Explanation. The future increase option rider allows the policyholder to increase their coverage in the future without providing new evidence of insurability. No medical underwriting. This is useful if the policyholder's income or needs increase over time. Question 29. Which of the following is an advantage of purchasing an individual disability insurance policy? A. Low premiums compared to group policies. B. The ability to select specific coverage options tailored to the individual's needs. C. Automatic coverage for work-related disabilities. D. The ability to adjust the policy without underwriting. Answer B. Explanation. One of the main advantages of an individual disability insurance policy is the ability to customize the coverage to fit the individual's specific needs, including benefits amounts, riders, and coverage types. Group policies typically have less flexibility and may not fully address the insured's unique circumstances. Question 30. Which of the following would be most likely to affect the amount of disability insurance benefits paid? A. The insured's age at the time of purchasing the policy. B. The insured's occupation and income at the time of the disability. C. The insurer's overall claims experience. D. The length of the insured's waiting period. Answer B. Explanation. The amount of disability insurance benefits paid is generally based on the insured's occupation and income at the time of the disability. Most policies provide percentage of the insured's pre-disability income, often around 60–70%, and the occupation may affect the premium and benefit structure, especially for high-risk jobs.